In our last video, we talked about using the cash receipts journal, sales journal, things of that nature. But there's kind of another flip side to those journals. Not only do we sell things, but we also buy things. So when we buy things, we want to make sure that those are recorded on a purchases journal. And then we of course want to know how much we think we owe each individual vendor, because if what they say we owe and what we believe we owe are not the same, we want to be able to support what we think we owe them. So you're going to have a purchases journal where you're going to record all the, then I should say, transfer all of those entries onto the accounts payable ledger and then into the general ledger under each of the individual accounts. Just as we did with the accounts receivable ledger, we're going to also prove the accounts payable as well. We want to make sure that the total that we believe we owe in accounts payable, all of the individual vendor totals add up to that amount. And if they don't, we have a problem. Just as we kept a separate journal for cash receipts, the same thing happens for cash payments. It again is just the opposite of what we talked about when it comes to cash receipts. And so we want to make sure that we are recording in the controlling ledger as well as the individual vendor ledgers, and then the specific accounts are also updated from the cash payments journal. So these are just a small variety of the transactions that you are likely to see in the general journal. Now, the title of this chapter is Information Systems, and that's kind of how we're going to wind things up here. There are generally two kinds of information systems in accounting that you will encounter out in the business world. You can have standalone software, or you can have integrated accounting software. And sadly, I have both. And why do I have both? Well, what I have found, at least on the scale that I'm able to afford and purchase and what is made for small practitioners as opposed to big, honkin' law firms, is really not as good. So I have practice management software. It has an accounting module. Things talk to each other, but it isn't as good as what I could buy with a standalone package. I use QuickBooks. And so for me to have integrated software, I find that it's a huge compromise. So when I'm shopping for software that can serve a variety of purposes, often I end up just hoping that it has a really good integration feature so that I can import and export transactions back and forth between the standalone software that I have. As I said, often these integrated packages are not as robust, the individual components of them, as you could purchase if you just went out and bought software that just did that thing. And so it's some of the compromises that one must make as a small business. We can either have transactions entered automatically, or we can batch process them. If you've got a website where you've got an online shopping cart, for example, that may feed directly into your accounting software, and transactions may be processed in real time, as opposed to doing things in a batch. When I receive money, it's not as though I sit down every time 50 cents comes in this office and do an entry. Nope, it's probably going to get collected, and I'm going to sit down and, at the end of the day or the beginning of the next day, I'm going to enter all of those transactions at one time. If I had a bookkeeper and that was all that person did was be responsible for entering transactions, then yes, I would expect that things were entered in real time. But the practical reality is that I'm entering things when I have the time to do it, and it's likely in a batch. When I send bills out to clients, that's definitely done in a batch. I mean, once in a while, I'll send out just a standalone bill, but that's not very often. And certainly no client wants a bill every time a transaction happens. If I'm doing work for clients and there's lots of activity going on in the case, I'm not going to send them a bill every time I do something. That would make them crazy. It would be entirely too much work. So all of those transactions are grouped together at the end of the month. I do one bill run. They get their bill, they can see everything that happened during the month, and it is a far more efficient way for me to manage it and for them to understand what it is they owe and why they're paying. So pretty much anymore, I don't know any accounting system that's being done manually. Okay, well, I say that, and now I think of a lawyer I know who is choosing to keep books and records simply using Excel. No amount of convincing, cajoling, whatever, has convinced this person that that is not a good way to run a business, but I guess he thinks it's better than paper and pencil because at least Excel will do the math correctly. And I guess that's true, but it is far too rudimentary for any real business to operate at any scale off Excel. The bigger the business gets, the more likely they're going to have enterprise management software that will have these small components, but in a big enterprise management package, the individual components are probably going to be robust enough that they are as good as anything you could buy as a standalone. So the big boys get to get the really great integrated stuff. One of the really nice things about using an automated system is your ability to run reports, and not just for archival purposes, but looking at performance, looking at comparisons, looking at where you were, where the company was last year at this time, last month at this time, and being able to make decisions based on being able to group information in a way that yields results that you can make decisions off of. You can create graphs from a lot of this stuff, and it helps to communicate information to decision makers in a more meaningful way. The person I know that's operating things on an Excel spreadsheet has really no meaningful way of grouping things, running reports, putting in different parameters into a report to generate all kinds of different results. It's only slightly fancier than a paper and pencil method. As I said earlier, much of what's happening these days is being done in the cloud. You can buy software that operates solely in the cloud versus on-site servers. And there are absolutely pros and cons to both systems. And ideally, any system you have would have some component of on-site and some component of cloud, just to ensure that there is some level of redundancy in case one of the systems goes down. There's at least some ability to recover data, or be able to at least have backups, so that if you have to purchase new systems or servers or whatever, you've got your data. If you become the victim of a ransomware attack, for example, being able to then get yourself back up and running because you have offsite backups that are offline and not potentially infected by whatever it was that got downloaded, is a way that companies could avoid having to pay large amounts of ransom, because that's becoming a pretty hot thing these days with hackers, is ransomware. And I would have to say that that's probably one of the things that as a small business owner makes me most concerned, because I still have to do the business of actually what this business does. I can't spend all of my days worrying about management issues, because then the work would never get done. And if big companies like Target, Blue Cross, we've seen this in municipalities locally, who can afford to have IT people to safeguard this stuff. And if those people are getting hacked and having to pay ransom, I just feel like somebody like me, who's kind of the chief cook and bottle washer, you know, there's a huge risk for somebody in my shoes. So I have to be extra careful. Now we're going to talk a little bit about some ratios to wind up today's discussion. Days payable outstanding. This is the flip side of accounts receivable outstanding, and this will give us the days in outstanding accounts payable in terms of what we owe, and where we're at in terms of paying our bills. So Costco has a much better payment record than Walmart. Walmart has 44.6 days in the current year of payables outstanding, whereas Costco more timely pays its vendors. And that concludes Chapter 7.